A small amount of money consistently invested into a super high quality ETF, something like VYM, can compound into a massive nest egg later in life. And in this video, I'm going to show you exactly how just $25 per day consistently can set up any everyday investor forever. Now, if you have an interest in long-term dividend growth investing and you want to learn more about VYM, make sure to stick around, drop a like down below, and let's get right into it. I just finished my brand new dividend investing ebook where I share exactly how I went from zero to now over 7 figures invested, and also on how I earned more than $6,000 per month in dividends. I also finished my custom dividend tracker that you can use to track your dividend income progress on an ongoing basis. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So heading over to the VYM website, the Vanguard website, which is who provides VYM. It says Vanguard High Dividend Yield ETF. Now the product summary is pretty simple, but it is pretty compelling. It says seek to track the performance of the FTSE High Dividend Yield Index, which measures the investment return of common stocks of companies characterized by high dividend yields. Now some more important aspects when it comes to VYM. VYM does have an expense ratio of just 0.06%, which is pretty much industry standard when it comes to this sort of style of ETF, but relatively speaking, it's very cheap to own, which is definitely going to be good, especially if you are a long-term dividend growth investor that wants to buy tons of shares long-term, because it can add up over time. Also important to know, VYM does pay a quarterly dividend, so you are going to have to wait every 3 months to get paid out. VYM currently is trading towards the high end of the 52-week range, so it isn't necessarily offering the best buying opportunity. But for longer term investors, as you can see, this thing has pretty much went up and to the right over time, and you're going to see exactly why in a second. Lastly, VYM's assets under management are over 60 billion, so it is one of the largest, most popular dividend growth ETFs out there. Now, VYM's performance is pretty impressive. Since around 2006, this ETF is up 120.6% on the max time frame, and pretty much whenever you bought into VYM, relatively speaking over time, it's went up and to the right, which is pretty bullish. Now, one of the reasons on why VYM is, of course, as popular as it is because the holding breakdown. It's very well diversified with over 450 different holdings, and this holding breakdown and top 10 holdings are very, very high quality. The majority of the ETF is made up of things like financials, consumer defensive, healthcare, industrials, energy, and technology. The top 10 holdings are things like JP Morgan, ExxonMobil, Broadcom, Johnson & Johnson, Procter & Gamble, the Home Depot, Merck, abbvie, Chevron, and PepsiCo. But like I said earlier, there's over 450 different holdings in this ETF, which for me personally, I love diversification just because if, say, 1, 2, 3, or 4 different names within a basket of stocks throughout an ETF don't perform well, or maybe there's some crazy scandal, whatever it might be, the rest of the portfolio will definitely pick up the slack as long as the rest of the portfolio is high quality, which in VYM's case, generally speaking, it is. Now, VYM's dividend and dividend growth is going to be very important, especially for longer term dividend growth investors out there that, like we said, even for this video's example, someone that wants to buy, say, just a small amount of money worth of VYM on a daily basis long term. The dividend yield currently is 3.13%, which is not bad at all, starting yield, but the dividend growth rate is also pretty good. The trailing 12-month dividend growth rate is 7%, 3-year 6%, 5-year 5%, and 10-year 7%. Now, although there are different dividend growth ETFs out there throughout the market that do offer things like a starting yield that's a little bit higher or even a little bit faster dividend growth, VYM has been very, very consistent, and just as of recently in December, they upped their dividend over 12% compared to the last year's dividend, which is super bullish and which made a lot of investors in VYM very happy. Now, going back a little bit further, you can see that back in 2021, there was a 94-cent dividend paid, so 2021 to 2022 wasn't as big of an increase, but just as of recently, a massive increase, which definitely has the entire dividend growth community pretty buzzing, especially because a lot of investors have been holding on to VYM for a while and waiting for that massive substantial dividend increase. But zooming out even further, if we look at December around 10 years ago or so, if we look at December of 2013, we're looking at a 53-cent dividend. So now about 10 years later, the dividend has doubled, which means that at least in theory, investors could assume that 10 years from now, there could be a chance that the dividend could even be $2.20 per share. Who knows what's going to happen in the future, but the dividend growth has been pretty substantial so far. Now, another important piece of data I want to share with you guys is if an investor was to have invested $10,000 just back in 2006 into VYM. What's crazy is that during this time frame, VYM has had a 15.8% average annual return, and a $10,000 investment since 2006 would now be worth around $140,000. Or also very impressive, if you did not reinvest the dividends during that same time frame, an investor would still be left with around $110,000, which is still very, very impressive. But like you guys saw during the title of the video, I'm going to prove to you that just a $25 investment into something like VYM that offers a nice starting dividend and healthy dividend growth would be enough to leave a massive amount of money when it comes to retirements. So keep in mind, these numbers are all going to be just estimated, and this is just one variation. You should of course go through a dividend calculator like this one, just Google it and see what your numbers could look like for yourself. It can be very helpful in building out your long-term strategy. But for this example, we're going to start with a $10,000 principal into VYM and then $25 per day annually, which is going to be $9,025 per year, a 3.13% initial annual dividend yield, 7% annual dividend amount increase, which of course can go up or down depending on what happens in the future, a 3% annual share price appreciation, 30 years invested. So again, this example is for a relatively younger investor. The distribution is going to be quarterly, and dividend reinvestment or DRIP is going to be turned on, which means that all dividends over time until retirement are going to be reinvested into more shares of VYM. Let's see what we get. So the first year, the $10,000 initial principal is going to earn around $316 in dividends, but after the annual contribution kicks in, the $91.25, this investor is already up to $19,600 and some change, and at $648 per year in dividends. By year number 5, this investor would have around $52,000 and almost $2,000 per year in dividends. Keep in mind, this is from a $10,000 initial portfolio and just $25 per day in VYM. Now, by year number 10, this investor would have around $123,000 in the portfolio and around $5,500 per year in dividends. Still not enough to live off of, but now we're getting up to those bigger numbers, and the power of compounding is going to kick in very substantially, probably after years, say 12 to 15. By year 15, $226,000 and $12,000 per year in dividends. So at this point, this investor is at over $1,000 per month in dividends, which is pretty substantial, but still not enough to live off. By year number 20, $387,000 and $25,000 per year in dividends. By year number 25, $653,000 portfolio and around $52K per year in dividends. And lastly, all the way down 30 years in, year number 30, $1.128 million and over $110,000 in dividends per year, which most likely for most people could definitely be enough money to live off of. Now, like I said earlier, this could of course change quite a bit if an investor, say, wants to invest $30 per day or $20 per day or $1 per day, whatever it might be. So I definitely recommend all of you guys to go through a dividend calculator, type in some numbers that might make sense for your situation, and it can be extremely motivating to see what things could look like later on down the road. But either way, this definitely proves that a relatively small amount of money invested every single day over the long term, even though in the early days it doesn't seem like it's going to do much, over time, if you just stick with it, if you just keep investing and stay invested, the portfolio will grow and so will the dividend income on a yearly basis. But now I want to hear from you guys down below when it comes to building out a long-term dividend growth portfolio that you might or might not be building as of right now. What is your number one stock and or ETF that you're trying to build out a massive position in as a current? Drop the ticker symbol in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.